Dhiraj Relli, MD and CEO of HDFC Securities, is now joining us to talk about markets, macro, and his observations as far as the entire corporate ecosystem is concerned. Dhiraj, good afternoon. Thank you so much for your time. Before I come to markets, I'm assuming that in your daily course of conducting the business, you must be meeting a lot of corporates of all shapes and sizes. There are now reports coming in from the RBI that in the fiscal 25 expectations are that private capex may also start picking up. Up till now, for the last few years, we have seen bulk of the heavy lifting and capital formation has been done by PSUs and government. Are you seeing early signs of that? Are these kind of things coming up in your conversations as well with corporates?
Absolutely. If we look at it, the capex piece, you have rightly articulated that most of the heavy lifting was done by the government and government-led capex only. And we've been talking about the capex from private sector is overdue. I think it's high time that we will see more and more capex from the private sector. We've seen these kind of cycles in 2003 to 2008 also playing out. I think higher capacity utilizations, availability of the credit, and also decisive demand coming in from the market, the visibility of decisive demand are the factors that will lead to a significant private capex.
Yeah, so private capex is likely to take a boost. Hi Dhiraj, this is Anisha also joining in the conversation. But what's the best way to play it? Because if you look at industrials, the likes of ABB, Siemens, they have run up quite considerably. L&T is not cheap by any yardstick as well. Other parts of the entire industrial vertical, whether it's infrastructure, cables and wires, etc., have also moved quite handsomely. So what's the best way to play the sector right now?
Anisha, you're bang on. The valuations are actually stretched for the entire space, including the industrials. If you look at it, they are even higher than these 2007-8 kind of valuation levels also. So my take is that one has to be very selective and cautious here when you are looking at bet for the near term. But in the long term, I think this is not going to be a 1 or 2 year play out. So this is a long-term theme which will play out. So then if you do a bottom-up stock picking, you will see these spaces. I think real estate sector has also done well, and we are seeing more and more green shoots there as well. So building material is one space, industrial is another space, construction is the another space where we are seeing some of their opportunities.
Your thoughts on this broader narrative, Dhiraj, that the broader market is actually expensive, because the other side of the people, a lot of practitioners we speak with are saying that there is merit in the broader market activity, because that is where the earnings action, improvement in balance sheet, all of that is also happening. So it is obvious if the money is actually going to that direction. Where do you stand on that argument?
I think it's the otherwise. Unfortunately, the domestic liquidity is chasing more thematic funds, thematic options, as well as more mid cap and small cap rather than large cap. Market unequivocally, market experts have been saying there is a value in the large cap, but still we are seeing the liquidity flowing more and more towards the mid cap and small cap, and that's where we see some stretch in the valuations. And we've seen that in last few sessions, significant corrections in the PSUs and defense space, and where there was a froth in terms of valuations, that they may not be fully corrected also, but the liquidity is still chasing the mid cap and small cap.
Okay, so that's the reason why we are seeing that big bump up there. But I just wanted to ask you, Dhiraj, in terms of if somebody had to put incremental money to work, which are the themes or which are the sectors where you think that risk reward is still a bit more conducive?
So, Anisha, I'll answer this question in two parts. If you are really a long-term investor, there are few themes that are playing out. I think formalization of economy, financialization of savings, energy transition, capex theme, and also digitization. These are the long-term themes where one can invest for 5 to 10 year kind of a horizon. And these will play out and will deliver superlative results for the investors. But if you are immediately looking at what sectors where you can take bets, my take is that the large banks, where we have still opportunity, banks have not participated in the rally for in last few years, we are still seeing value in the large banks. And I am also at the same breath saying that avoid small banks. Large banks, both in the private sector side as well as PSU side, we still have a valuation comfort there. And the valuations are actually lower than the long-term average valuations here. If you look at price to book value, or if you look at how they are growing in terms of their profitability and top line, we all know that the credit growth has been robust, and we just spoke about the capex opportunity. I think this will play out very well for the large banks. And also we are seeing a revival in the consumer staples and durables as well. With the green shoots coming in from the rural markets, with good monsoon, with more initiatives taken by the government in budget to boost the rural economy, I think we are seeing some more upside in the consumer durable side as well as consumer staple side. I just mentioned that the real estate has done well. I think they have had exceptional quarter in the last quarter. We still see that there is this has revived over after many years, and this trend may continue for some time. And again, I am coming back to that building material is one space where you will see benefit with the lag. Now people have taken the bigger homes in last few years. They will be renovating, they'll be doing interiors. So that's where we will see a significant upside.
Any thoughts on how the sectors which are kind of correlated with what's happening in the global macros, say metals, for example, they had a good run. What are your thoughts here?
I think metal is largely a global play, and what we are seeing is China is going through a transition, and that may have a contagion impact on the overall global market. So that's where there is still uncertainty on the metal piece. We are seeing structural shift in demand in China and the low downward bias in the demand from China. In fact, that has also attributed to the not letting the crude prices go up also. Though in India, we've seen decent growth in the crude consumption, but there is a decisive declining trend in the consumption in crude, even in China also. So it has got to do more with the global demand rather than domestic demand. In fact, prices in India, input prices have been less. That's where some of the sectors have been taking advantage, though the top line was not growing, but bottom line was growing well in last few years.
So that's about metals and some of these global facing names as well. But what about oil and gas? I mean, ONGC, Oil India, the rest of the energy pack, even GAIL, etc., have been on fire of late. Even OMCs for that matter. Do you think they're done with, or should you stay invested in these names?
I think they are in an overheated zone. So my take is that one can avoid oil and gas at this stage. Though gross refinery margins are also more or less 3 to 5% only, but the demand in overall global demands are not growing, though India demand has been steady. So I don't see significant upside from current levels. In any case, we have seen all these stocks have done well in last few sessions only.
Right. One last word before we let you go. What are your thoughts on the value part of the entire consumer basket? Value retailers, value say footwear companies. Basically, up till now, the upper end of the K has been the premiumization theme has been playing out. But with bottom of the pyramid coming back gradually, say rural, tier 2, tier 3, do you think that the lower end of the K, also represented by whatever categories, may start coming back? Is there a case there?
I think what we are seeing in the Indian ecosystem is the structural shift in the propensity to consume and save less. That is also getting reflected in the lower deposits also. So that is where we are seeing more and more discretionary spend, and discretionary spend has led to premiumization in most of the industries. Now is the time when you will see a volume growth coming in because of this discretionary spend.
Okay, that's the word coming in from HDFC Securities. Thanks so much, Dhiraj, for making time and speaking with us. Appreciate you joining us on this show. With that, If you like this video, then like, share and subscribe to ET Now.